Okay. Welcome to the very first episode of the XTZ.News podcast. I'm humbled by the amount of global support we have received during our pre-beta phase. With over 500 active followers before we even launch our website, I want to personally thank each and every one of you. Please keep in mind that we're currently undergoing heavy development, so thank you for being patient as our project grows and evolves. As a friendly reminder, this content should not serve as any financial advice. XTZ.News is not directly associated with Dave or Vertalo, and this content is to be used for entertainment and educational purposes only.
Check it out.
Today I'm joined by Dave Hendricks. Dave was named one of New York's top tech innovators by Business Insider. He's the founder and CEO of Vertalo, a fintech company focused on connecting and enabling the digital asset economy. Prior to Vertalo, Dave co-founded Live Intent, the largest programmatic email advertising platform in the world. Today, we'll be sharing with you many different topics. I'm very excited to be joined with Dave today. He's an awesome guy. So Dave, thanks for joining us.
Oh, it's great to be here, Vince. Thanks for having me. I'm really honored to be on this first edition too. So this is great.
Yeah, I'm so excited that you could join us. So, before we get started, I want to take the time, with every episode I do to kind of talk about how I meet the different individuals that I'm bringing on the show, regardless of how it's done, right? So obviously we're in the middle of a pandemic. So let's kind of talk about how we met initially. Dave and I met on Twitter. So from your perspective, Dave, you want to kind of tell that story and kind of from your perspective, our first interactions?
Yeah, well, I found you covering one of our amazing clients, MountX, which is a Canadian and Mexican real estate fractionalization platform. So you were writing an article about MountX's use of Tezos in the digitization and tokenization of Mexican and Canadian real estate, and then we started talking about that, and of course, I'm super interested when someone wants to talk about this topic, our clients or our tech. So I love the curiosity.
Yeah. And for everyone listening, I reached out to Dave on Twitter. I was putting together my own self-published content, trying to cover some of what I thought was very interesting and exciting innovations within the technology space. Reached out to kind of get some clarity on different technical specifications and just wanting to fact check and make sure that I had the right information before publishing, even though it was just under my name and, not any sort of business or organization. So I was really, really actually taken by, how humble you were. You immediately responded. I mean, it was like within just boom, 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 you responded. You gave me the facts I needed to write my article. And you made the time for me, right? As just like a random guy on the internet who just wanted to learn about what you were doing, right? And I really appreciated that.
Well, it's really easy to respond and to help people that are trying to move things forward. And of course, I was touched by your interest in in that story, and also impressed by the initiative. And if people reach out to me and they're not trying to sell me LinkedIn lead generation services or outsourced development, I'm almost always going to respond. And we happen to then have a really, really long kind of conversation, which has led us to today. So it's great. So thanks for reaching out.
Of course. So before we kind of get into both the news, the tokenization of real estate in Mexico that you worked on, as well as what your company is about, can you kind of tell the audience about your larger background and, before you founded Vertalo, what did your experience look like, and what was, your professional work life before Vertalo?
Well, I started programming computers when all the toys were made out of wood. And so I got involved when I was in boarding school, programming on some of the same computer systems that Paul Allen and Bill Gates originally programmed on the digital PDP systems. And I went to college and I studied political science, but got into computers before any of my friends. And when I came out of school, I didn't want to enter politics professionally or work in politics. And I went to work for a company called Arthur Andersen. And I had Arthur Andersen was an accounting firm that got knocked out of business in 2000 because of the Enron scandal. But while at Arthur Andersen, I got involved in personal computers, in personal computer networking, and databases, something that I'd been working on for years before Arthur Andersen. As a matter of fact, when I was in college, I worked for the Reagan administration in the Department of Education, programming FEMA computers to manage the travel of the Secretary of Education and then President Ronald Reagan. So I had worked on databases, had a top secret clearance, and I got into using computers for both trading options and then in accounting systems. I spent 5 years working on accounting systems and doing securitizations and other types of computer consultancy work at Arthur Andersen. I left there to go work for a Goldman Sachs joint venture with a company called J.E. Robert, where I built databases for the Resolution Trust Corporation S&L crisis. And that was basically unwinding a bunch of real estate trades and purchases. And I built computer systems for that.
And yeah, I would love to learn more about that too, because I mean, I kind of got that in a summarized paragraph, right? But I mean, there had to be so much that went into that. I mean, I can only imagine the kind of work and dedication that it took to do something like that.
Well, it was a lot of, it was tough stuff. I got involved in it initially while I was at Arthur Andersen, unwinding, doing what are known as workouts, where a bank had a portfolio of non or underperforming loans that they needed to sell. And basically what you're doing is you're creating databases of these loans and who owns them, and what the book value of the asset is versus the equity value. And so that was a kind of a database function. And then I went to work with some other Arthur Andersen people to this Goldman Sachs J.E. Robert thing. And what we had to do there was collect a lot of information around real estate ownership and then securitize the assets for secondary sale. So basically package up these distressed real estate assets and then produce kind of offering documents and then sell them to new buyers. And so I was doing this before the real commercial internet took off. And so not only did I have to build databases, but I also had to connect databases at various banks using fractional T1 networks. And so it was a kind of a combination of creating databases and then connecting those using very kind of pre-internet, pre-HTTP connections. So I did that, and that was really interesting because you could see what happens when things get messed up. And then after doing that for a little while, I ended up being a technology headhunter because I was, there was an interesting opportunity to learn about how to find great people for projects, which is something I'd always been doing before then. And then I got hired by Oracle, and I did that kind of headhunting internally at Oracle for a little while. And then my former boss tapped me while I was at Oracle to run the relationship worldwide between Oracle and Arthur Andersen. So I then started basically competing against Microsoft for enterprise, integration of Oracle systems at this big accounting firm. And that was exciting for a couple of years. And about year 2000, my boss left and he went to an email marketing company called Message Media. And I went and I started working in the email industry in 2000. And that was before anyone knew how important
how big it would be and how key to the entire way that the world functions, not just,
Oh yeah.
Yeah.
I mean, at that point, it's very similar to today. Like today, you have to do a lot of explaining as to why digital assets are interesting, why you should be involved in digital assets, why blockchain, why distributed ledger, why Tezos. Helping people understand, what those things are and why they need to understand them, why they're worth investing in, both financially and technically. That was kind of what I encountered in my first job. But this is really important. My first job in the email marketing industry was for a big company that was a leader in the space, but they had no user interfaces. So everything was very high friction. It had to be done what is known as full service. Like the client would have to call us and say, we want to send this email. And we'd have to schedule the email and work with the client. It was very, very expensive, very, very high friction. And then you'd send the email and there wasn't a lot of reporting or optimization, et cetera.
It sounds like a lot of manual labor. I mean,
it was a lot of manual labor. It was very, very expensive. At the time, we were charging $30 1,000 to send email. Now, just so you understand, today, sending email at scale costs 1,000 times less than that.
Yeah.
Okay.
Yep.
But we were making money hand over fist doing that. But I thought that the experience was lacking, and I tried to get that company to start integrating self-service web-based functions so that the clients could run their own campaigns.
Yep.
This is very similar to today. Trading shares in secondary markets is very, very expensive for owners of private shares. The interface for buying and selling shares in a private company are just very, very frustrating. So let's go back to 2000 and 2002. In 2002, I took a look at this opportunity. Sorry, 2000, late 2000. I took a look at this opportunity. I said, "Wow, this company is not going to modernize its systems to reduce friction in the sale and of these services, and also in email marketing." So I went to a company called Cheetah Mail, and at Cheetah Mail, me and the Vertalo CTO met, and
that's where you met. Okay. And
that's where we met. And this is in fall 2000. I'd started the other company in 1999. And what we did is we revolutionized the email marketing industry by making it lower friction and self-service, lower cost, lower friction, self-service. And we inverted the economic model and made it really easy for companies to implement email marketing programs. So that was really successful, and that company was sold to Experian in 2004, and it became ultimately $1 billion company. And I was there. I
that's
joined.
Amazing. I mean, I did a little bit of research, and it looked like there were 2 acquisitions according to Crunchbase, and
it went private again. Yeah, it got bought up, and it's now called Cheetah Digital.
Okay.
And so, I never forgot the lessons there. And in 2009, I co-founded a company in New York called Live Intent. And Live Intent, we did something similar. We found that email is still amazing, and it gets more amazing. Just look at Substack, right? I mean, email is amazing. It's email is not only a way to send information, but it's also a user ID, and it's called first-party data. So what we did at Live Intent in 2009 was we said, well, this is the best advertising inventory in the world, but it's very expensive to place ads in email because it has to be done manually. And so we created this basically an ad tag, okay, the live tag, and the live tag was a piece of
created like a metadata tag that did not exist before.
Yeah, that did not exist before.
Okay.
And we said, what if we could aggregate all the email inventory sent by all the publishers and make this inventory able to be purchased at scale by advertisers to reach humans instead of it being sold one-off in sponsorships? What if you could just buy you could buy audience programmatically? And so we introduced that in 2010, and then
10 years ago.
Yeah.
I mean, I mean, this is incredible. You're talking about 10 years ago, not 2020, 2010.
Yeah, 2010. And we turned that into $100 million company in about 5 years from there. And the genesis for Vertalo was in 2015. We were raising a Series D round. It ended up being a $35 million round of funding. And the round almost exploded because of we didn't have the right information about the employees, like what documents they had signed. It was, the investors wanted to make sure that everyone had signed NDAs and invention assignments and all that. And it hadn't been done properly after I had handed off the CFO role to somebody else.
Mm-hmm.
And I had managed to run through 5 rounds of funding before then without a problem. But this last round of funding was almost stopped by this document problem. So in 2016, me and my 2 co-founders of Vertalo got together on a boat in Berlin. And we said, well, what if we could build a platform that would use smart contracts to connect companies and their employees or their associates for the purposes of maintaining these documents? So we founded that company, the parent company of Vertalo Series X, in 2017 in Austin.
But before we go too far deep on that, right? And I'm really excited to go deep on it, but let's just talk a little bit about what a smart contract is, because I think there's going to be a lot of people that may watch this video or listen to this podcast, and they might not have any background on what a smart contract even is, right? So let's just talk about that and what the concept of a smart contract is and what the value proposition is there.
Yeah, so basically a smart contract enables you to get consensus or agreement between 2 parties. And then once that agreement, maybe it's a transaction or some other action is performed under the rules of that smart contract, which is just a piece of computer code.
Mm-hmm.
Once the consensus has occurred, and sometimes that's adjudicated by a number of nodes, bakers in Tezos or consensus nodes in Ethereum or Bitcoin. The results of that transaction having been agreed upon and signed by both parties, then gets written to what's known as the blockchain, and it writes an audit trail, and then there's been agreement by multiple parties, usually more than 2 parties, that this transaction occurred.
Yep.
And then there's a transfer of value from one party to another. Sometimes it's information, sometimes it's money of some sort.
Yeah, and it can be any piece of metadata.
Yeah,
I think a common misconception that people from all different paths of life have is that blockchain technology is either not secure or not auditable or confusing because X, Y, and Z. When in reality, it's actually much more auditable, easier to audit than a lot of other systems, wouldn't you say?
Yeah, it's easy to audit and it's easy to track. Unlike the change in a ledger, like a spreadsheet type ledger, where someone can go in and make a change and that change is not known to anybody and it hasn't been confirmed by a counterparty or a disinterested third party. The smart contracts involve disinterested third parties in approving or verifying that an action has taken place. And so as a result, it makes for a really, really strong ledger that resists corruption. Corruption either by mishandled data, fat fingers, or maybe malfeasance. And so by using a confirmation or consensus mechanism in a smart contract, what you get is a really, really clean record. And it can't be erased because it's an immutable,
It's there forever. Yeah.
immutable record of a transaction. So we thought that, wow, this would be a really great way to keep track of who'd worked at a company and what documents they had signed. So early 2017, we started working on this, and we released this first version of Vertalo to my former company in July 2017 for the purposes of due diligence, so they could manage a diligence ledger of this personal, human capital data. September 2017, we said, oh, wow, all these people are raising non-dilutive rounds, using smart contracts. And we knew a little bit about smart contracts, and maybe we should run, an ICO. In October 2017, after talking to our lawyers and in consultation with one of my co-founders, Gautam Gujral, our general counsel, who's former SEC, we decided not to do an ICO. We decided to do an STO. So we couldn't find a lot of help.
Before we get into that, let's also kind of talk about what the differences in those are. Because once again, I think there's going to be a certain percentage of people who may tune in and not understand or know what the differences between those two things are.
Yeah, so an ICO is typically a non-dilutive issuance of non-equity tokens in a project. Basically, it's a community creation function, and it funds a project and by selling typically non-equity derivatives. These tokens are might allow you to get access to a service. They could be an incentive or a reward, or they could just be a way for you to participate in a project and maybe get some upside. Okay, but it's not based on typical securities contract, and you have no equity there. You have no rights. All you do is you own these tokens. And that was a really interesting kind of groundbreaking concept. It's still a cool concept to get community support for a project. The problem is that there are a lot of issues with selling these, and how you promote them, and are they in fact securities? Is there a promise of future gain? There's the Howey test and all that, and there are a lot of kind of bad actors who are using these things and promoting these as ways to make quick buck, and you're going to own some of this. But the SEC didn't love that, and one of my co-founders is former SEC in trading and markets, and so he's like, we shouldn't really do this. So in October 2017, we just started to go down the STO route, and the STO route's security token offering, which is really new in October 2017, was a way to use smart contracts to encode equity ownership on blockchain, and then use the smart contract capabilities to restrict transfer and trade. If you can restrict transfer and trade using these smart contracts, then you can enforce Rule 144 or other sorts of securities law, such that you can comply with Reg D, which says, you need to let these shares season for a year after primary issuance before they can be traded. That was not a feature of ICOs, but it is a core feature of so-called security token offerings, or what we refer to often as digital securities or programmable assets.
Yep.
In March of 2018, having tried to find help, there weren't really any issuance platforms that like some that about today. We wrote our own smart contracts for equity ownership in Vertalo SEZC, a Cayman company, a subsidiary of Series X, my parent company, that we set up with Lowenstein Sandler, our longtime law firm. They're amazing. Lowenstein Sandler, great firm, and Deloitte, the accountancy, tax, and consulting firm. We created an entity called Vertalo in Cayman, and we issued these security tokens to 53 holders in March of 2018. Now, what we found during this process was that, issuing a token is relatively easy, and writing the smart contracts is not very difficult. But what was difficult was to distribute them in a compliant fashion and then to distribute them to the users in such a way that they could see their equity holdings like you would see on a cap table. And we didn't see any system that, that was going to be able to allow these holders to see their holdings and to manage them. We didn't see something like a cap table that would enable the issuers to see who their holders were and to manage their trade and transfer restrictions and to comply with the kind of transfer agent rules and share register rules like you have in a typical offering. So in May of 2018, not seeing anyone solve this problem, we pivoted Vertalo to focus on shareholder register and transfer agent capabilities, so that issuers of these security tokens would have a platform to manage their holdings like you would see on a cap table. So we got started then really, really early, but we thought, wow, if digital assets, programmable assets, digital securities, STOs are going to be a thing, the issuers and the investors need a safe, secure place to manage and steward these assets. And that's what Vertalo is. We're a data management platform for digital assets. And that's what we've been spending our time on.
Yeah, so let's take a little bit of a step back, right? So we kind of alluded to this previously, but let's talk about the work that you did with MountX and kind of how that came together and kind of, what was done. From my understanding, it was the very first example in the entire world of real estate being tokenized in Mexico. That is my understanding of what happened. And, two different apartments in Mexico that were, completely tokenized. So can you kind of talk about how that project came together, the people that were involved, the work that happened, and all of that?
Yeah, so I think there are up to 15 properties now, but Enrique Suarez and his team started looking around the market for a provider that could help them onboard investors onto digital ledgers and purchase fractionalized shares in residential real estate.
Yep.
And the obvious insight was that if you want to fractionalize ownership in real estate, then and then facilitate lower friction secondary sale, that you weren't going to be able to do this on a spreadsheet. That in fact you needed a system that could not only onboard the investors, but could also manage the investor data over a long period of time, so that the issuer, the owner of the real estate asset, could see their holders, and the holders of the fractionalized real estate interest could see their holdings, and also be able to ultimately take them to a secondary sale platform to buy and sell these interests. Enrique found us. He had spoken to a number of the other kind of similar platforms or issuance platforms, et cetera. And they all wanted to charge him like $100,000 just to tokenize an asset, and it was going to take them months to do it. And that's crazy. Okay, if you're trying to fractionalize an asset which is worth $500,000,
yeah, you're not going to spend $100K. I mean, you can't.
Yeah, you can't spend $50,000, $100,000 to do that. It can't take months. And people who are buying these fractionalized interests don't know how to use MetaMask. Okay. What they want to do is they just want to go buy something, and they want to see it in an interface which looks a lot more like a Fidelity or a Schwab account or Coinbase.
Yep.
And they don't want to have to master the intricacies of MetaMask wallets or private keys, et cetera. And Vertalo is one of, if not the only platform that offers digital securities that can be managed in a custodial wallet, meaning a wallet that you can access via email address and password without having to manage private keys. And so we spent time talking to Enrique and said, Enrique, not only can we manage this data for you, but what we can do is we can facilitate the investor onboarding process such that when they go to your site, they can click on a tile, see something to invest in, and then go through a KYC AML process and a document signing process, and then have the shares deposited in a wallet, which they can access via email address, and they can do that in minutes, okay, in a browser. And so what we did was we won him over based on cost effectiveness and great workflow, great investor onboarding flow, and then a great purchase experience for investors and a great post-purchase experience for investors. And Enrique and his team, were the first to do this in Mexico. And just as of today, they just won a LATAM startup pitch contest, and they be out of, 100 entrants in this startup pitch contest. They just won, and that just got announced today.
Really?
It's because what they're doing.
I didn't see that. That's
what they're doing is they're doing some amazing things, which increase access, improve access to these private investments for regular investors. And they're doing it on the Vertalo platform, which operates in white labeled, branded fashion for MountX. And they're digitizing and tokenizing these on the Tezos blockchain. And so, we also, with these guys, what they wanted to do is they wanted to work on a blockchain which had lower costs for their investors. If you've watched this market over the last year, you've seen DeFi come in and get a lot of attention, and it's amazing. But the amount of activity on the Ethereum blockchain because of DeFi has driven costs up, transaction costs for Ethereum smart contracts to the moon, such that it can cost $100 to perform a transaction on the Ethereum blockchain. If you own $1,000 of shares, you don't want to spend $100 to trade those shares or to even transfer them.
You can't even consider it. I mean, it's not even an option on the table.
Yeah. And so, the combination of our investor onboarding, our Vertalo white labeling capabilities, the custodial wallets that are accessible via email, and the lower cost by using the Tezos blockchain, I think was the thing that won over Enrique. And I mean, if you want, you guys can, watching this, you can go check out MountX and then learn from Enrique. He's got a lot of videos on this, including live tokenization of assets on Tezos blockchain, which he did on the Vertalo system live on YouTube. I don't know, maybe a month ago in November.
Yeah. So, some of this might end up going over some people's heads. Just to kind of recap, Vertalo enables, a platform that will be much more simpler, easier to use, easier to navigate, easier to understand, very similarly to platforms that people from traditional markets are accustomed to and feel comfortable using based on user experience, based on understanding of just the way that different systems work. And then you're taking this innovative technology such as Tezos, and you're incorporating it into your system and then offering it to other clients in a way that all makes comprehensive and legal sense.
Yes. What we're doing is we're simplifying in investor onboarding, digitization, and tokenizing of assets to the benefit of issuers and investors, to reduce cost and to reduce friction in both primary issuance and secondary trading.
So then from here, can you tell the audience, how you learned about Tezos to begin with and how you got involved in the community and kind of what your involvement with Tezos has been and kind of how you ended up incorporating it into some of your work, such as what we just talked about?
Well, so Tezos was working with one of our investors and clients, Wave Financial, and Wave, David Seymour and Ben Tsai at Wave introduced me to Chris Lawler at TQ Tezos in the summer of 2019. we had already been looking at alternatives to Ethereum and had spoken to a number of chains who wanted, chain communities that wanted
Yep.
us to implement their blockchains in our system so that they could tokenize more easily. And what happened when we started talking to the TQ Tezos folks and to Chris was we found that there was a lot of synchronicity. There was a lot of kismet with what Tezos was focusing on, which was real world asset tokenization and non-monolithic smart contract creation and lower cost tokenization and transfer. And they were building their FA1 and ultimately FA2 smart contract suites, which, funny enough, were very, very close to the Vertalo V token smart contract suites. We saw the controller function capabilities as being very similar, the modular components of these smart contracts and how they could be modified to facilitate trade and transfer. And what we started doing was to onboard Tezos onto Vertalo to see how this would work. And in the fall of 2019, we did a full tokenization live on stage and secondary trade at the LA blockchain summit, what used to be called it used to be an ICO summit, but it's
evolved.
But now it's called LA Blockchain Summit, run by the Draper Goren Holm team. And we said, wow, we can make this Tezos stuff work really well and maybe work even better than Ethereum for digital assets. And so that led to us formalizing a relationship with the Tezos community and TQ Tezos in early 2020. And this year we spent a tremendous amount of time and effort in working closely with the Tezos community. And one of the things that attracted us to the Tezos community was it's very, very decentralized. They've got a really active foundation which funds and grants a lot of projects, but unlike some of the other blockchain community kind of incubators, doesn't control them, and rather facilitates the ecosystem. And so what we've seen is an ecosystem which aims to be an alternative to Ethereum as a smart contract oriented community, which is building rails to facilitate digitization of assets, all kinds of things, NFTs and securities and incentives. And we just kind of fell in love with this community that was just grinding away and building. I wouldn't call them an Ethereum killer. They're kind of a next generation smart contracts platform. And we saw a lot of, we felt a lot of we saw the world in the same way. So.
Oh, that's great. Now, can we kind of just talk a little bit about, looking 5, 10, 15, 20 years out, what do you see as, your long-term vision of traditional assets, especially real estate, and how they're going to change, how they're going to adapt, how they're going to evolve, and what that looks like as the years progress?
So today, the public markets are very modern. They have vestiges of antiquity in them. The 2-day settlement period, the kind of embedded seed and co type actors and DTCC. Despite these kind of hegemonic organizations and their kind of built-in friction, those markets are very liquid and they're very modern, and There's not a lot of problem finding liquidity. There's market makers, et cetera. Contrast that with the private markets, which are much bigger than the public markets. When I say private markets, I mean all private assets which are not publicly listed. They dwarf the public markets. And the biggest asset classes in these private markets are real estate and debt. Real estate and debt are still traded over the counter, peer to peer, with few, if no, marketplaces. And the effect of the lack of marketplaces in private assets leads to what was basically systemic illiquidity, meaning you could have an amazing asset which is paying a 7% annual return, which is a great, reliable return. But say you need to liquidate a position because you have a capital call or you want to buy something else.
It's not quick.
It costs you. There's an illiquidity discount to selling that private asset, which is not unusually 20 or 30%. People, because these are not marketable securities, they're still securities, they're just not marketable. People are less willing to pay full price because they themselves know that if they want to turn around and sell it the next day, they're probably going to have to accept 70% of book value. I see the digital asset and programmable asset space, what some people refer to as STOs, as being a superior method, a superior way to own private assets and also trade and transfer those private assets. So I see blockchain enabling lower friction, lower cost secondary liquidity in private assets, because you can encode trade and transfer restrictions in these smart contracts, and you can programmatically tender those assets to secondary sales venues like T0 or North Capital's PPEX or Everflow or INX or OFN or Texture or Coinbase or Archax. Yeah. All of these different secondary sales platforms, you can bring these assets in one form or another to these secondary sales platforms where they can make a market in them. And then once the trade has occurred, the order's been matched, and the payment has been accepted, you can then encode transfer the shares, and they're on this ledger. And the ledger is facilitated by blockchain technology like Tezos. This technology, rather than being on spreadsheets, rather than being on paper, will facilitate lower friction, lower cost trade and transfer of these assets. I think over the next 5 years, this will become commonplace. I think within 10 years, it will become legislated. In fact, that as a private company, for investor protection reasons, this will take some years, but they will mandate that the shares are encoded on blockchain ledgers, because they can't be accidentally or purposefully corrupted by hands on keyboards. And so in order to have confidence that someone owns these shares, they need to be encoded and programmed on this asset base, the asset base being blockchain. And so that's what I see happening. I don't know, 20 years is pretty far out in the future. If it's not the standard in 10 years, I'd be surprised. Yeah. In 20 years, they're just going to be regular liquid markets in private assets that are global. They will be regulated, but they will be global.
So from there, I think it's a natural kind of progression to talk a little bit about the news from Germany. I remember that day when I read it, everyone was kind of freaking out about the Bitcoin price. Everyone's like, Bitcoin, money, price going up, right? And you and I were like, look at this news, look at what's happening across the world. This is a big deal, right? So let's talk about that, and let's talk about why it's a big deal, and what it could mean moving forward for other countries, other governments, and the world at large?
Yeah, so today in the United States, the SEC and other regulators do not recognize blockchain as the ultimate source of truth for ownership of assets. As a registered transfer agent, and Vertalo is an SEC registered transfer agent, we need to maintain a shadow ledger on a regular database or on a spreadsheet, which details out the share ownership, which is nuts. But it's kind of a vestige of the lack of trust that regulators have coming out of the ICO era. They still haven't split ICOs from the underlying technology. They will. Germany is really interesting. Having set up businesses in Germany and offices and employees and all of that in Germany, I've seen how conservative Germany is and how paper-based Germany is. It's amazing. Germany still uses, paper and hand stamps. If you talk about medallion signature guarantees, that's been the ultimate medallion signature guarantee kind of place in the whole world. Earlier this month, in December 2020, Germany recognized blockchain-based ledgers as reliable sources of truth for the ownership of securities. This is a really, really big deal. What that means is they've said, wow, this is a step function improvement on the existing management of shareholder ledgers. And in fact, we can and will trust blockchain ledgers like Tezos as a source of ultimate truth as to the ownership of an asset. Now, Delaware corporate law in the United States does this to some extent, but the securities regulators still do not. So Germany, which is typically very conservative, has taken this step, and this is a very, very big deal. And it's exciting because this is the business that Vertalo is in. Vertalo is in the business of the data management of digital assets, specifically securities, which are encoded using smart contracts. And so I'm super excited about it. I think it's great news.
Yeah, so I agree fully. I mean, I think it is incredibly exciting news. So I got to ask, do you think other countries are going to follow suit? Do you think they're going to do you think it's going to kind of lead to be like a chain reaction? Or do you think it is going to just be like more of other countries watching what's happening and kind of being slower to react?
I think over the next 2 to 3 years, it could happen next year. I mean, the wheels of progress grind more slowly in some countries than others. But I expect to see Singapore, Japan, Korea lead in this. The United States, as the largest, 50% of all global equities are in the United States. I expect the United States to follow suit. We have a new administration coming in, and we will have a new chairman of the SEC coming in. We have, the rank and file at the SEC are still there, but we can expect to see the United States follow suit. In fact, last week, 8 congressmen wrote a letter to departing Chairman Jay Clayton, advocating and recommending that, in fact, the SEC recognize blockchain and distributed ledger technology as a source of truth, and that for managing securities, that it should be considered to be trustful, and it's very exciting to see that the Congress, which oversees the SEC, is recommending that the SEC accept and adopt this sort of technology for the purposes of encoding trustful share ownership.
Great. No, I mean, I think that's all really amazing perspective. So if I came to you and I was a traditional real estate investor, let's say I have a dozen homes or a dozen apartments, or whatever form, you want to discuss, right? And I came to you and I said, look, I want to use your platform and I want to tokenize all of my assets. Where would you start, and where, what would that process look like? And kind of, can you walk through for the audience of, the kind of work that would get done to tokenize those investments for that investor?
First of all, you need a lawyer, and you need some great documents, and you need an asset. So if you want to if you own an office building and you want to fractionalize an office building, you've got to make sure to create maybe a private placement memorandum or some legal documents that support the sale or fractionalization of those assets, under securities law. If you already own the asset and you already have investors, it could be just an amendment for your shareholders to say you're going to do this. But you need to get the right legal underpinnings. So, you can't fractionalize something you don't own, and you can't sell shares to somebody without some kind of share purchase agreement or other sort of legal document that encodes ownership. A smart contract is not a replacement for a regular legal document. Today it is not practicable to replace those regular legal documents with Solidity or any kind of other programming based smart contract. So you have to get that straight. If you're going to offer this as a primary issuance, then you need to have an investor onboarding platform like what Vertalo does. And then if you're going to distribute these digital or tokenized assets to investors, you need to have a platform that can manage those digitized tokenized shareholdings like Vertalo. And so again, the first thing is have an asset either that you own or you've identified. Get the right legal representation, have the right documents, have the right investor onboarding process built in. Make sure you KYC, AML, and get your investors to properly sign documents, and then make sure that you're storing these digitized or tokenized assets on a ledger system that can manage this data type, and that's something like a Vertalo. So that's what you need to do. I mean, it really starts with a great asset. Yeah. I mean, you can certainly use this, like some of our clients, like RAI Capital Growth, who are running a Reg S. They are raising money for a pool, and you can also do that. So if you have a great business plan, and you've got some target properties that you're going to buy, you can also use this, and you can raise money in an STO format to go raise money to purchase assets that you will then fractionalize. You can do that. But the key thing is you got to have a great business plan. You got to have a PPM or some shareholder documents, and you got to have a great lawyer. That's it. And then you've got to work with a partner like us that is prepared to support you over a decade or more. As you know, because you're really talking about stewarding the ownership of these assets.
Great, thank you. I really appreciate that. So our audience is going to be coming from all over the world, right? Listening and watching this. We're going to have people from all across the U.S. as well as all over the globe. Frankly, for those listening, Dave is located in Austin, Texas, which is just a few hours south of where I live in Fort Worth, Texas currently. So Dave, if someone came to visit you and the team, where would you take them out to eat, and what would you recommend that they would have to have while they're in Austin that they cannot get anywhere else?
I'd probably want to take them to 3 or 4 places over a couple of days. First of all, it's a great barbecue town. So there's Terry Black's, there's Franklin's, there's Cooper's, or if you just want to stop and get fill up your tank, you can stop at a Rudy's barbecue and fill up your gas tank and get some barbecue. So you definitely got to get some barbecue. This is a great taco town, and you can go to any number of food trucks. But you might, if they've never been and they've never been to Austin, they've never been to Texas, they want to get a taco, I might think about taking them to Torchy's. Torchy's is a great taco chain. They just announced a $400 million round to expand and increase adoption and access to tacos, just like we do with these securities, by branching out to make a taco which is better than Taco Bell. Don't go to Taco Bell. Go to Torchy's. If barbecues and tacos is not enough for you, maybe you want to get some fried chicken. And Nashville is the capital of hot chicken, Nashville hot chicken, spicy fried chicken. But here in Austin, Texas, we've got an amazing new up and coming chain that started here. It's got 3 locations, I think, called Tumble 22, and you can get Nashville style hot chicken in Austin, Texas. If you don't want it hot and you just want a great fried chicken, there's Lucky's. There's also Gus's, and that's great. And then we'd probably want to take the dog for a walk around Town Lake or Lake Austin, and I think that's a great thing to do. There's so many great things to do here in Austin. Food's one of them. Music will be one of them again. And when it's open, I'll take them to the Continental Club on South Congress.
So what do you think of all the big players, making the move from California to Austin? Do you think it's going to keep happening? Do you think it's going to be kind of a trend over the next couple of years, or do you think we've kind of already seen it? You got people like Elon and Joe Rogan just packing up, moving ship, and heading down your way. So what do you think about that?
Austin's a great town. It's not California. It's not New York. It's not Florida. It's not Colorado. It's not Seattle. Austin is a fantastic town. It's surrounded by Texas. If you come to Austin, you can drive to Texas in 15 or 20 minutes. But Austin's a great technology town. I moved here from London. I'm a New Yorker. I love it here. I think you're going to see a lot of people come here for a couple, 3 reasons. It's a great lifestyle. The weather is great. If you're trying to get great tax treatment, there's no state income tax here, and it's a technology town. It's top 5 tech town in the United States. As far as I know, it's a great place to start a technology company, and it's got some amazing talent here. So I think we can expect to see more transplants. But like we always say, if you're still listening, feel free to move here, but leave what you didn't like behind, because let's keep this place free and fun loving, and if there's something that you didn't like in your old town, there's no reason to bring it and replicate it here.
That's great advice. So I want to thank you, for being the very first guest on this show. It's very, very appreciated, on behalf of both myself and then the entire XTZ.News team. I want to really, really thank you for that. If someone wants to learn more about you, your business, or really what you're about, where would they find you?
Well, I'm super easy to find on the internet. I'm at Dave Hendricks on Twitter, and you can find me on Telegram. And of course, there's always LinkedIn. But if you want to find out about the more interesting part, which is Vertalo, just go to www.vertalo.com. That's VERTALO.com. And then let's hop on the phone, and I'd love to learn more about your project and how we can help.
Thank you, Dave. And as we wrap up, I want to take some time to thank, the over 500 people who've already taken a chance to follow us on Twitter. Before we even get our beta website launch, we're looking to hopefully get the beta website launched by the end of this year. So there's going to be a lot of exciting stuff coming. Be sure to both follow the XTZ News Twitter account at XTZ News. as well as, bookmark the XTZ.News website. So thank you, Dave. And thank you for everyone who took the time to listen today. I hope everyone enjoys their evening, day, morning, wherever you're at in the world.
See you, everybody.